Wall Street has come to an end. The Nifty failed to hold on to 11,000 and ended over 0.5% lower. The Sensex also slipped about 300 points and ended at the day's low point. The banks fared better than most of the benchmarks and ended mildly higher, while the mid-caps fell in line with benchmarks. Surbhi Upadhyay is here with a wrap of all the trading action from today. Surbhi.
Bulls finally decided to take a bit of a pause, a bit of a breather. That's what the Thursday session was really all about. And perhaps you can't complain because the market has had 2 or 3 solid sessions. Today was consolidation. Towards the afternoon, this trend became a little more clearer. In fact, towards the end, we had the Nifty dip below the 11,000 mark. Now, that's the thing. This market has been absolutely locked in a tight range. The upside of 11,050 is proving to be a bit of a hurdle. The market's not able to sort of move above that in any convincing fashion. But the downside, at least for now, say technical experts, remains capped as well. Largely, the other good aspect of trade is that the interest in the mid-cap market is still intact. Though the mid-cap index did end negative today, you still had a lot of stocks flying around. The advanced decline ratio was still positive. So you can say that maybe just consolidation and a bit of a profit-taking session is what we had today. I'll come down to stocks. Very mixed session for banks. The bank Nifty outperformed the Nifty. It was flat, whereas the Nifty ended about 50-odd points lower. If you look at the banks that were on the downside, Yes Bank, Axis, Kotak, these were 3 key names on the downside. But on the upside, you've got HDFC Bank, ICICI Bank, IndusInd Bank. So absolutely divergent polar trends across the banking index. Other Nifty losers included Reliance, Asian Paints, actually a whole host of consumer stocks, even Maruti, Eicher Motors, Titan, if you're talking about the discretionary side. All of these stocks were unwinding some of the gains that they saw yesterday. The gainers of the day included HDFC, Ultratech and Sun Pharma. Now let me talk about mid-caps and why am I saying that the excitement level hasn't entirely gone away, though it has been tempered for sure. Look at the gainers. Though the index is down, I'll still talk about gainers today. And you have names like IRB, Graphite India, Gati, Venky's, even the odd Wockhardt Hospital. So there are lots of stocks still flying around. It remains to be seen if this is just a dead cat bounce or if this is long-term money that's coming back, interest that's coming back into these stocks. Finally, last but not the least, Apollo Hospitals was the stock of the day. The promoters have sold down about 3.5% of their stake to raise some cash and reduce their overall pledges. We caught up with the management as well. The money that they're expected to receive from the Apollo Munich deal, that's still taking some time. And in anticipation of that, they've done this transaction. They still promise that their overall pledge is going to be down to 20% by December. That stock was down 2.5%.
Surbhi, thank you very much for joining in with all the market action. Now here's a CNBC-TV18 exclusive. Housing finance companies surged in trade today on the expectations of a stimulus package for the sector. However, these stocks gave up some of the gains in the late trade after Finance Minister cleared the air on this issue. Sapna Das joins us with more details on the clarifications that have come in from the North Block. Sapna, what are the Finance Ministry officials telling you?
Well, Ritu, let me caveat this in the sense that this is one, important view that has come in, but it will be one of the views among the, among the discussions which are ongoing right now, and there is a serious interministerial that is on at the moment. So we have to really see where this all leads to. There is no proposal as of now, at least with the Department of Financial Services, so that clarity is very much there. If you look at the rationale of, whatever is coming out in the media, I mean, we are given to understand, and this is something we can, talk about as well, that basically, if you look at the role of National Housing, possibly the trigger has been the fact that NHB is no longer the regulator for the housing finance companies. That role has now gone over back to RBI. So keeping that in mind, possibly this, opinion has come up that possibly they should be looking at buying equity or stake in HFCs. Well, the government's viewpoint as of now is very clear that there is absolutely no rationale there. NHB's role is still pretty much clear, even if it has got over its regulatory role. And, by the way, some bit of that is still remains with National Housing Bank. They are in charge of the bank boards, the boards of the HFCs. So there is a lot of representation, there's a lot of discussion there, and plus it's a refinance agency. So that's the critical point to keep in mind. So, why would NHB at this stage get into buying equity or HFCs? Is that really warranted? A bit of a question mark on that front. And also very quickly on the other side of the story, in the sense that, this talk about setting up a government-owned fund to give guarantees to those borrowers which banks find ineligible. Well, the view as of now is that not very sure whether this is going anywhere, because this entire process of sanctioning remains with the banks, and not sure whether the government will like to stick its neck out and take a risk on that front.
Absolutely. Sapna, thank you so much. Those are some very important clarifications coming in. NHB, of course, as Sapna says, is a refinancing agency. There's no sense in them picking up an equity stake. And secondly, not sure if the government can set up a fund to guarantee borrowers that are ineligible to begin with. Now, on that note, we'll move on to another CNBC-TV18 exclusive. This one again from the banking sector. Bank of Baroda surged in trade today on the buzz that the lender is planning stressed asset sale. In fact, sources have told CNBC-TV18 that Bank of Baroda is looking to sell non-performing assets to the tune of 9,000 crore rupees, and this includes about 35 accounts. We're given to understand that one of the largest ones on this list is Reliance Communications, remember, which is currently undergoing insolvency proceedings, where Bank of Baroda has now put up its entire stake on the block, followed by Alok Industries, which is the second largest account. On your screen, the other accounts as well: Gammon India, Amtech Auto, Orchid Pharma, ACC, that is Asian Color Coated Ispat, Lanco Solar, among other 35 other accounts that have been put up for sale. Important to note, this is not the first time that BOB has showcased these assets for sale to either banks, financial institutions, or asset reconstruction companies. And the very fact that a large number of these assets are currently facing IBC proceedings shows that the lenders are getting frustrated with the delays and are looking at alternative ways to recover their large dues. Now, moving on, life insurance data for the month of August is out, and this data shows that the pace of premium growth for private insurers slowed during the month. Of course, government-owned insurance giant LIC bucked the trend. Yash joins us now with all the details. Yash, take us through the key takeaways for the month.
So as far as the life insurance data for the month of August is concerned, failed to get any cheer for private life insurance companies. As far as the entire sector is concerned, as a private life insurance space, that space has seen a growth of 15.4%, which compares to a growth of 26.9% in the first 4 months of the current financial year. The APE for the private sector has also grown at about 21.8% in the month of August, which compares to an average growth of 23.5% in the first 4 months of the current financial year. Talking about the individual companies under the private sector space, to start with HDFC Life Insurance, in the month of August, that company has seen a growth of 27% approximately, which compares to a growth of 42% in the first 4 months. That is the average growth. For ICICI Prudential Life, the total premium in the month of August is 13.5%. Again, you can see the comparing figures, 25%, which it compares to Max Life, a growth of 23.18%, which compares to 24.6%. SBI Life has seen a growth of 26%, which compares to 35.45% in the total premium. Remember, total premium is a sum total of the group single and non-single premium and individual single and non-single premium. Talking about APE for all these companies, for HDFC Life, the APE has grown at 57.7%. Strong growth, but still, as compared to the average of 4 months, 61.26%. ICICI Prudential Life, the APE has shrunk by 1.3%, which compares to a growth of 30 basis points in the first 4 months. Max Life, a growth of 48.1% versus a growth of 30%. SBI Life, a growth of 23.6% versus 30.61%. This was the disappointment which came on the APE and the total premium front for private companies. Speaking about market share, HDFC has lost market share by 73 basis points. This is in the period between Jan to August 2019. ICICI Pru, a loss of 4%. Max Life, 1.65%. Again, SBI Life, 119 basis points as far as loss of market share is concerned. For LIC, of course, a different story. What we've seen in the month of August is that it's seen a strong growth when it comes to the APE business, which has grown by 10.4% compares to an average of 5.46%. Some slowdown in the group business, and the total premium for LIC essentially is up 16.73%, which compares to 51.86% in the first 4 months of the current financial year.
All right, Yash, thank you very much for joining in and bringing us the details of all the life insurers' growth for the month. Now, India's demand for fuel growth by 2.8% on a yearly basis in the month of August. This is the lowest level of growth since last November. Sonal Bhutra joins us now to take us through more details. Sonia, analyze this data for us.
Well, in the month of August, oil products demand has fallen to 2.8%. This compares the 3.3% levels that we saw in July. So basically, there is some growth in some products, but it's in diesel that we have seen some fall. That's around 1.1% in the month of July. And this is the lowest growth that we have seen since November 2018. This is because the industrial production that was soft, because foreign trade and also port traffic was lower in this particular month. Apart from that, it was petrol demand that was very strong. It rose 8.9% in the month of August. LPG demand also surged around 13%. It was good in July as well, and that is because of additional PMUY connections that we saw. Because of that, the LPG demand was quite strong. We also saw some increase in the bitumen demand that increased by 24%, but that's a small portion of the overall demand, so that it really doesn't matter. So the point is that it has slowed down versus the last month, but considering that it is still a growth, because in last few months we saw a negative growth as well. So though it is a fall on a month-on-month basis, but still the trend is positive since it's a growth higher than 2.5%. Back to you.
Sonal, thank you very much for joining in with that. We'll take a short break on that note, but up next.